Hey everyone. This week, House leadership unveiled the long-awaited tax bill, the Tax Cuts and Jobs Act. I have said for a very long time that we need a massive overhaul in our tax code. It's simply too complicated. Our current tax system, it puts a huge burden on families. It hurts job creation. This bill delivers real tax relief to every American across this country. I couldn't be happier about it. I hope everybody's very excited about it. Every single dollar that the government takes, or that taxes you, they're taking a dollar out of your pocket. That means one less dollar for your mortgage. It means a less dollar for your auto payment, less for your family to go on vacation, or for you to start your own business. I respect the work of your hands. I know what it is to go out there and do very intensive work. I worked at a time in my life, throwing blocks around with masons. Obviously, I worked in the military, so I'm aware of what it is to go out there and do that kind of work. If you're a police officer or a fireman or you're in the military, you risk your life with your work each and every day. That is the fact of the matter. That's the work of your hands, risking your life for others. If you're out there, if you build homes, or if you drive a truck, or you're landscaping or working on cars, you're doing plumbing or electrical or HVAC, you are sacrificing your body for your earnings each and every day. And whether it is that you work in an office or in a hospital, your work is time away from your family. And you earn the wages, you deserve to keep the wages, and that's what I'm committed to do, is making sure that you get to do more with what you earn, not Washington. This is the first change in this way to simplify our tax code, to lower middle-class taxes since Ronald Reagan was in office. So I want to go a little bit more in depth into what this bill actually does. I'm going to speak primarily about the individual tax code, the personal income taxes right now, and then in another video at another time I'll speak a little bit more about the corporate tax rates. So first, a brief explanation on how our tax code works. Most folks in our district, in our area, Palm Beach County, Martin County, St. Lucie County, pay taxes in more than one tax bracket. Under the current tax law, for example, if you are single and the first $9,000 that you make, that would be taxed at a 10% rate. And then everything from that $9,000 level to the $37,000 level is taxed at a 15% rate. Everything from $37,000 to $91,000 is taxed at a 25% rate, and everything from $91,000 to $191,000 is taxed at a 28% rate, and then that keeps going all the way up to a 39.6% rate. So many people are paying in numerous tranches of taxes. They pay more than one rate depending on what income amount that is at that specific time. So most filers, they pay multiple rates. The numbers are a little bit different for those that are married or those that are the head of household, but it works in the exact same way. And what we are proposing is to lower rates, whether you are single, whether you're married. What you used to pay 10% on, you will now pay 0% on. For that single guy that was paying 10% on the first $9,000 of earnings, that first $9,000 of earnings will have a 0% tax on it. So what you paid 15% on, you will now only pay 12% on. What was taxed at 25 and 28% is now only taxed at 25%. What was taxed at 33 and 35% is now taxed at 35%. But because of all the cuts in the lower tranches of the tax bill, it is significantly less for anybody that is paying at that top marginal tax rate. And then at the 39.6% rate, which remains the same as the top rate, but now for a single person that is making over $500,000, you're going to be taxed at that rate instead of what was previously taxed at $400,000. And for a married couple, over $1 million. So everybody in every tranche is going to be paying less. We are also making it so that everybody is eligible to deduct those costs from their life at double the rate. In our area, there's about 30% of the people that file taxes, they itemize their taxes. They go out there and they list all those individual things that they want to deduct separately from their taxes. Everybody else takes a standard deduction. So what we are doing is we are doubling the standard amount of that deduction. So again, using the example of a single person, The single person was capped at $6,300 for the standard deduction. That's now going to go to $12,000 for the standard deduction. For a married couple, it was capped at $12,000. Now it's going to go to $24,000. A head of household was capped at $9,000. Now that's going to go to $18,000. So by doubling the standard deduction, everybody's taxes, they just got a whole lot simpler to file, and they just became a whole lot less. So to recap, the individual tax rates will be lowered for lower and middle income Americans to 0, 12%, 25%, and 35%, and will continue to maintain that 39.6% rate for the highest income earners. But in all of those lower tranches of taxes, there's much less tax that's coming out of any person's check, regardless of what their top income is. As your standard deduction have been doubled. So from $6,350, it's doubled to $12,000 for individuals that were, from $12,700 to $24,000 for married couples. Additionally, this bill does away with many special interest deductions that complicate our taxes. Instead, you're now going to be able to file your taxes on a single postcard, making everybody's life much easier. This bill, it also provides huge tax relief for American families by establishing a new family tax credit, which raises the child tax credit from $1,000, where it's currently at, to $1,600 to help parents raise their children, as well as a tax credit of $300 for each parent and non-child dependent that exists. It will also preserve the child tax and dependent care tax credit to help out not only children but elderly dependents such as disabled grandparents who may need financial support, additional financial support. It also preserved the earned income tax credit to give important tax relief to the lower income earners. Beyond that, the home mortgage interest deduction will also be preserved for existing mortgages, those mortgages that exist currently, and for new purchases for homes up to $500,000. And again, the standard deduction was also doubled, so that's something that plays into the ability to use that mortgage interest deduction in the higher amounts. Retirement savings programs such as 401ks and IRAs will also be preserved so that you can continue to invest in your future and your children's future. Those contribution limits will not be touched for that. Another important change in this tax bill is the repeal of the alternative minimum tax. So right now, there is a supplemental income tax that's required for certain people that requires them to calculate their taxes 2 times using 2 different formulas to pay the higher of the 2 amounts. Repealing the alternative minimum tax means that no matter who you are, you file your taxes once and you pay once, and that is much more simple and much less expensive. So that is another incredible change that's going on with the tax code. So let me give you a few examples of what this looks like in real life. So I'll give you an example of a family of 4, with 2 children making, say, somewhere around $59,000 per year. You would pay roughly $1,200 less in taxes because of the lower tax rates and because of the increase in the child tax credit. So you're going to be basically getting paying roughly $1,200 less in taxes. Give you another example. A single mother of 1 that's making somewhere around $30,000 a year would receive a refund of roughly $700 more than what they did last year because of the lower rates and because of, again, the increased child and family tax credits. So again, that's a great increase to anybody that's in that income class right there. I'll give you another example. A single firefighter that's making somewhere around $45,000 would go from being taxed at the 25% rate to now being taxed at only the 12% rate as the top rate. And every check of that person, of that firefighter, would see way more in every check, way less taken out every single month in the check that they're receiving. So the bottom line is that our government is going to be making sure that you get to keep more of the money that you go out there and earn. And that is one of the best things that I could ever say to anybody, any day, any time of the year. You're going to get to keep more of your money. Far too often, people in Washington, they do forget that every dollar that is spent here, it is the fruit of somebody else's labor. It is the fruit of your labor. And this change means that you get to keep more of what you earn. If you have any questions about how our new tax plan is going to impact you personally or the details of the proposal, please reach out to our office. We are going to be having opportunities for you to come in and speak at town halls to speak about this. We're going to have opportunities for you to come into the office and meet and speak about this. If you want to make a phone call to us, like I said, let us know, and we will help work you through what these changes actually mean for you in your individual life. So look out for our weekend review video tomorrow with the rest of what we've worked on this week. There's been a lot of other stuff that we've worked on this week, so look out for that video. And until I see you, I hope you have a great one. Look forward to seeing you around town.